sort it out.
Good morning, everybody. Happy Friday. It's the 20th of May. We're Signal Centre talking ball. I'm Joe, joined by Steve and Jamie. We've made it to the end of the week, lads. Well done.
Yes, nice one. Another week.
Yes. How you both doing this morning? Okay.
Yeah, I feel a bit older.
Okay. It's not your birthday.
No, just sort of like from last week. I feel a little bit older.
Right. Okay.
I think it happens naturally.
Yeah.
But anyway.
Way, doesn't it?
I think it's Wednesday. Going out on Wednesday, sort of like, just for a couple of hours, a few beers. And,
yeah, that upsets everything, doesn't it?
Yeah, definitely. Too old for it, Joe.
Yeah, I'm feeling the same. Okay, let's get stuck into the latest headlines then to wrap up the week. So the ECB stays hawkish. ECB policy remained an important focus, with the reports that a majority of policymakers are prepared to back at least 225 basis point rate increases this year. Minutes from the April policy meeting reported that there was widespread concern over high inflation numbers, and some members viewed it as important to act without undue delay. In terms of what's going on the macroeconomic front, the Philly Manufacturing Index cooled yesterday. It declined sharply to 2.6 for May from a previous 17.6% reading, and well below the consensus forecast of 16. There were, however, strong monthly readings for new and unfilled orders as well as shipments. So there was some reasonable outlook, but that's a massive miss on the number there. The big news overnight is that the Chinese have put a rate cut in place. The central bank held the one-year lending rate at 3.7%, while the five-year rate was cut to 4.45% from 4.6%. The five-year annual rate is mainly used for mortgages and maintained expectations of further support measures for the real estate and for the economy. In terms of risk assets yesterday, we saw a bit of a recovery, most notably in Europe. The optimism was based on the fact that the very aggressive Fed rate hikes could potentially be avoided, and also the cut in Chinese rates have helped underpin confidence. We've seen a bit of a retreat in the US dollar, which we'll come into in a moment when we look at the charts. And we've also seen UK retail sales defy expectation. The consumer confidence dipped to equal a record low for May, but the latest retail sales data was stronger than expected, with a 1.4% increase for April, compared with expectations of a small monthly decline. So that's that for the latest headlines. So let's get into some charts. Steve, I'll hand it over to you, and you can run us through cryptos to start, or commodities today.
I'll go through cryptos to start.
Go on.
Good to take a look at Bitcoin, and this is the weekly chart, and we've got the Bitcoin week lasts a bit longer than our very lazy rest of the financials week. With that, this closes on Sunday, but it is currently going to prove to be the lowest close since all the way back in January 21, or so. Actually, the lowest close, if we really take it from the week of 21st of December 2020. We've got this band of support that we are hanging on to, clinging on to for dear life. And this week's low, we've seen it down to 28,615. Last week, obviously, remember, we got down to 25,500. So I don't know. I think we're still struggling. When at the weekend the volume's a bit lighter, you might get a little bit of market skullduggery going on, market manipulation, maybe propelling this back up. The resistance above at the moment, in my eyes, is around about 31,500. The main one about 33,000. They're the two levels that really bulls will be really keen to get us back above. So we did have this bullish day on the 12th, and that was a long-legged doji and almost like a shooting star candle, and that sort of helped support prices from that dip down. Would be really interesting to see a revisit of 25,800. And if we can get through there, I think the next port of call will be around 20,000. Ethereum is holding on as well. That's trading around 2,000, nice psychological level, but that has been flirted with the 1,700 level. And again, a break below that. That's more important. That held that line much better than if we take it back to. So if we look back at where December 20 here, this is where Ethereum was when Bitcoin closed on that day. So Ethereum has definitely outperformed on a percentage basis. Looking at commodities, let's take a look at gold, which has continued the strong move higher, and we've had now, well, a really sort of like decent day yesterday. We're managing to retest the 1850 resistance, which we spoke about, but this bullish hammer from the 16th has sort of like put a temporary bottom in. That's at 1787. Next levels of resistance on the upside is 1860. That was the high from the 11th and the 12th. Above that, we'd have 1865, and this band of support now turns into a bit of resistance. Probably comes in all the way up to 1890. So yeah, sort of like a few levels on the upside to watch for gold. Really, a close below 1808 really turns this negative. So we can see on the weekly chart how gold has performed better. You've got this really nice sort of candle. Would be even better if it did get above 1882, but that's not going to happen this week. Oil also has sort of stalled from this break from the bearish, the bullish flag that we were talking about. That has a potential measured move of, let me just try and get that for you. Let's get rid of this line for a start. Measured move target for this flag would be around about $188. People talking about $200 oil this week as well. So that's definitely something to continue to watch for. We seem to be sort of having this corrective sideways move at the moment. WTI crude oil, Brent crude oil, there's only about a 90-cent difference at the moment. So that's really come in to sort of reasonable levels. And let's take a look at the daily chart, and we can see how we broke above this trend line, the downward trending resistance line. Price action has come back, retested it, and looks pretty positive. So further upside. Is that my gun dead from yesterday? Maybe.
Yes.
Further upside looks almost like we're sort of at levels, especially if we close around here on a weekly basis, that will be positive. And further upside we should see next week. Resistance on the upside 113 and 115.80. Support on the downside now at 103. So they're the levels to watch in oil. Pass on.
Superb, thank you. Okay, let's take a look at FX then. So it's really been a story about the dollar. Let's just bring that up. So yesterday, this is the dollar index chart. We had a really big reversal yesterday, really big red candle, but only down to this trend line support that we have in the short term, which seems to be holding at the moment. We've also got this red line of support, which is at 102.78, and that seems to be doing a job at the moment. But it's the first evidence I've seen for a while of maybe some sort of rounded kind of top pattern actually beginning to emerge on the dollar index after a really strong run to the upside. As you can see here on the daily chart, it's been pretty relentless. So, you know, any kind of correction here or sort of top forming wouldn't be a disaster, I don't think. It would just be an opportunity to, you know, trim off some of the positions, you know, some of the excess that we maybe have in the market at the moment, allow things to consolidate, and then maybe continue pushing higher over the more medium term. But obviously that is creating some relief in other currencies that we typically like looking at that are linked to the US dollar. So if we take a look at euro dollar, for instance, we're seeing a similar sort of thing, but obviously in reverse. Are we in the process now of forming some sort of rounded bottom pattern on Euro US dollar. We saw a nice engulfing candle yesterday. We're a bit flat as things stand at the minute, but we've still got this band of resistance to try and overcome at 106.35. If we can do that, then maybe we are in the process of forming some sort of short-term bottom, and we could see a corrective move to the upside. If we take a look at cable, similar sort of situation. Again, the band of resistance here at this time at 125.07. So if we can get above that, then maybe we are in the process of starting to form a bit of a short-term bottom. There were some interesting ones actually on the commodity currencies. Aussie yesterday is above resistance, although that did make new lows recently. So that looks quite positive. A decent engulfing candle yesterday. And also New Zealand dollar versus the US dollar had a really big move to the upside yesterday. I think it was up nearly 2% at one point in the session. So we obviously saw, a decent bit of risk appetite there. So this is how it looks on the daily. Just have a quick look there. I've just eyeballed something that may be interesting. Potentially we've had a break of this trend, maybe not quite. Yeah, it's not exact, but we had a decent bounce from this 61.8% fib level. And I think when I was looking at the intraday charts, it looked to be forming a nice sort of inverse head and shoulders pattern, maybe with this being the left shoulder, this being the right, and then we've seen a decent breakout to the upside. So let's just, something along those lines. So yeah, looking quite positive on that at the moment for a short-term turnaround. Obviously, the overall picture still looks pretty bearish, given that the strength has been so good in the dollar index, but potentially we're going to see a little bit of a correction here in the US dollar. Let's take a look at indices now, and I'm going to start off with the Aussie market, and let's go back to the daily charts. So we've seen that drop towards this 78.6% fib level here at 69.44, and that seems to have attracted some buying interest. Overall, it still looks pretty range bound. One thing to point out here is that we do have the general elections in Australia this weekend, so this could be set for some pretty volatile action late on Sunday night when it gets opened, and into early hours of Monday morning. So do be careful of that if that's a market you're interested in. If we take a look at the German DAX, we spoke earlier in the week about that breaking out through this downtrend resistance line, but it was very short-lived. We actually engulfed all of those gains that we posted on what looked to be a break higher. I highlighted this level at 14,319. It's been a level that I'd like it to overcome before I got too excited about this break of trend. It never happened, and we got this big old reversal. So still looking, for me, as though it's on the back foot, and we're likely to see lower prices. Let's take a look at NASDAQ. So we did see a bit of a risk-off move yesterday, risk-on move yesterday in many markets, but not really in the NASDAQ. It's still holding this 50% fib level. And as you can see yesterday, if I just scroll in, we've got this doji candle here. So potential for some indecision, maybe even a double bottom pattern forming. But in order to complete that, we need to see a break above that level at 12,576. So still plenty of work to do. Very much still under pressure in the short to medium term. So I wouldn't be getting too excited about that yet. If we can get above the 12,576 level, then maybe that would be a reason to look for a correction. Finally, let's look at the S&P 500. That actually closed negative yesterday. So not quite the doji that we got on NASDAQ, but it does seem to have stalled pretty much in line with this low that we got from the 12th of May. So again, potential for a double bottom, still a very early call. It would need to come way up here to complete that. So overall, I'm still concerned about this big head and shoulders top on S&P 500 and still looking for lower prices. So that's it from me.
Nice one.
Jamie,
Cool.
over to you for some stocks.
Thank you very much, Joe. It was a bit of a mixed bag, honestly, yesterday, as we'll come on to, but we will start off with our biggest gainer and loser. Our biggest gainer being Neuro, which was up 76.28%. Looking at this from a technical perspective, it did actually run into quite a nice technical level of support that we saw back in March of last year and then again in May. Hit that last week, and now we've rocketed higher on the back of some news. Not really sure what the news is, but up 76.28%. Our biggest loser of the day was TGI, Triumph Group, which did actually gap lower I think, was that on an earnings announcement? It looks like it. Was bought back up, kind of came right into this support level actually, off the back of that. It's not drawn particularly well. Off the back of that, the earnings, but then sold off again yesterday, both on very high volumes, you can see there. So that's looking pretty sick at the moment. I'm going to try and do another quick transition over to what I was looking at yesterday. I think it's quite interesting to get a bit of a picture on the general S&P 500. So as you said, it did close slightly lower on the day, but it was a bit of a mixed bag overall. But I think the significant things to take away are some of the bigger names, your Apples and Googles, were still struggling. There was actually certain sectors that were holding up better than others, but tech did struggle. It didn't have a great day. Apple was
It's
down
based
another
on
2.
weighting, Jamie, do you know? So the weighting of the index. Is that why we've got the technology area so big?
I'll have to dig into it. I think that's how it works, but I don't want to give you a conclusive answer because I'm not 100%.
Sorry,
but I think
put
that
you
makes
under-
sense,
Put
doesn't
you under
it?
pressure there.
No, it's still good. I think it
Yeah.
would make sense though that like your Apples, your Microsoft, Googles, and Amazons were bigger because the fact that they do carry more weight. So I think that's probably how it works. But this is only something I've kind of discovered recently, and I think it's quite useful to get that like snapshot view of how the market did perform. But as I say, Apple, we've talked about Apple a little bit recently. We will come on to it actually. So I will hold back what I was going to say. Let me jump back into some charts. Here we go. Get this up. Right. Perfect. Right. We'll jump into, I'll tell you what, we'll start with Apple. And we noticed this last week, how it was forming this kind of double or even triple top pattern. And I think the last time we really looked at it was just around this support level it was at. And since then, I think relative to the rest of the market, it's underperformed Apple. And it's now come right down into this previous support level from back in October, which also provided resistance all the way back from, if I can draw this out a bit, not perfectly drawn, but it's provided resistance as well. So we're at a very key level now for Apple. If we kind of bring up some kind of oversold, overbought indicators, to bring up RSI, we're getting into that oversold territory. Not quite there at the moment, but it wouldn't surprise me if we did see a bit of a bounce on Apple, even if it was short-lived. From a weekly perspective, it's not looking good at all. I think if we actually kind of close around the levels we're at, even if it closes at the support level, certainly not a good picture being painted for Apple at the moment. Closing right at the lows of the week. So we'll keep an eye on that, and we'll jump back into Apple on Monday and see how it did close this week.
We'll go Apple bobbing on Monday, shall we?
Apple bobbing, there we go. I like it. Having a look at Cisco. Cisco had earnings come out yesterday or the day before. I think maybe we missed it if it was the day before. But yeah, not good at all. Down 13% yesterday. Gap down. As you can see, looking at it from weekly, it looks even worse. I think we talked about Cisco a little while ago, actually, because it was one that we put an idea out for. I think we had this kind of band of support here, but what we actually traded was a shorter term support level that got broken. It was actually, if we zoom in here, we had a lot of wicks coming off this level here, and then it was this candle here. Let me highlight it for you. Where's my shapes? There we go. This candle here, we got to break through that short-term support, and then we talked about how it then quite nicely came and retested just here. And I mean, if you had got short there and you'd held with it into earnings, which is not something I often recommend doing, but you'd be quite nicely placed now. But yeah, not a good time for Cisco. What have we got here? Costco, Cisco, they're all struggling. Gap down 2 days ago, and no buyers wanted anything part of this yesterday either, closing even lower. So again, we'll draw this back to weekly. And I mean, these look like the signs to me of a turnaround for the worst. We can kind of draw a bit of a trend line actually, which I think it's kind of coming right into on a weekly time frame, which is quite nice actually. This is the third time it's been hit, so I would expect to see some kind of support, some buyers come in here. But this price action into the trend line I don't love, because it's been quite an aggressive move down. Whereas when it previously hit, it kind of ambled down, but this is shooting down. So like I said, I wouldn't be surprised if we did find some support, but it's not looking too good in my opinion. I think there could be a retracement lower, and for this kind of stock, we've had a big. I mean, can't even zoom back far enough. I have to go to a monthly. I mean, really, since 2009, it's been one way on the monthly chart, and this is the
some
first
fibs on
really.
that, Jamie.
Yeah, get some. I don't even know where to
Just
take
from
it from,
that.
Woody.
Yeah.
From
No, from the other fib. That's it. From that sort of like that. No, I'd go from the sort of like point you mentioned. Yeah, maybe even back there. Yeah, there.
Yeah, just here. Okay.
Yeah.
So we've got up to here. It's drawn a 38.2 as well. So we've got a 38.2. I'll come back to a weekly. But this really has been one way
put that 38.2 on so quickly?
So I just double click on the fib, and then there's the boxes here.
All right, you seem to do that really quick.
Fibs. I do look at fibs quite a lot, so it's kind of But I think that's probably a reasonable target.
Yeah.
That would, of course, look to be a break of this trend line I've just drawn, which would be negative for the short-term sentiment. I think if we then, I'll remove this fib quickly. I mean, you can kind of go a bit crazy with fibs. You don't want to do too much. But if we take it from this recent low, that would have coincided with a 50% fib. And the 61.8 is down here. So I think that kind of a retracement wouldn't be awful.
That's good. Looking for these fib confluence levels. So taking sort of like, because it's been such a big trend higher. It does feel like we're entering proper bear market territory, not just, it's a bear market because it's come off 20% or something. Much more than that. Yeah. Really interesting sort of that. It seems like everyone's a bit distracted by Johnny and Amber. That's what I think.
Because of it, taking everyone's gaze away.
Yeah, and the markets are sort of like collapsing around us, especially with these big names that you're highlighting are at some sort of like seriously bearish levels and don't look like they're stalling.
Yeah, I think that's the thing. Yesterday, it felt for me that it was actually some of the smaller names starting to prop up the bigger names.
Yeah.
Which is interesting. It's been the opposite for the last kind of month or so. It's been Apple, Microsoft, and Google that's been holding up the rest of the market, but now it seems that those ones are falling as well. So it'll be interesting to see how the next couple of weeks develop. Finishing off on Costco, as you were saying, Steve, confidence levels of fibs. This looks horrible, I know, but the thicker fib level, so this 38.2 here is the longer term fib, and the shorter term 50 comes in at about the same level. So this also looks like a previous area of resistance because this is a weekly chart, so we'll dive in even closer on a daily chart. You can see that there was resistance and there were buyers and sellers fighting out there. So I think this level looks quite likely to be tested. Whether it's this week or not, we will have to see. But yeah, interesting levels all around. We'll jump into a couple more quickly. We looked at Twitter yesterday. I don't think there's any more real update. A lot of, not really much to say on that. There was a couple more I wanted to look at. We had ITV. I know it's not particularly exciting, ITV, but we're at this previous support level. This is a weekly chart. So we had support in October of 2020. It was tested after this big move down. It was tested here in March. And if we drill down to a daily, it was retested back last week. And we're forming what looks like a continuation descending triangle as well. So a break of that could see a further move lower. And I think a next kind of target. We've probably broken through all relevant fibs here. But we could certainly be looking down to these lows here of kind of 55 to 60. I think that would be a next realistic target there. We'll finish off jumping into our interesting levels. This one we looked at yesterday, this PCTI, still at this trendline resistance, so nothing really more to update there. We looked at PBT a few days in a row. Really, it's asking to break through that resistance, but the sellers are defending it for all their worth. I still think there's a break coming, and like I think we said yesterday, the earnings on what looks to be the 1st of June could be the catalyst for that break. What else we've got? Debo, similar kind of thing. We've got this ascending triangle continuation though, with this support level coming up with it. So interesting to keep an eye on. We'll kind of keep coming back to these. The new ones for today though, CTS had this previous level of resistance here. It broke out on the actual breakout day, wasn't that good a volume, which I don't love to see. That's a bit of a red flag for me. And the volume actually came the day after, which formed this what's this shooting star type candle here. which is quite this to me. This is quite negative because really what you want after a breakout is almost an exhaustion from the sellers and buyers to really push through. Having the volume on this, then especially into yesterday with above average volume back into the support. Today's a key day. If we get closed below this level, I think it was a false breakout. If we can kind of rally higher, then maybe the breakout was valid, but one to keep an eye on for sure. Should be short bank shares at a pretty important level as well. I did actually have another one, but I seem to have not put it on the chart. But we've had this, if we zoom out a bit, we've had this, it was kind of ambled up actually. I wouldn't say a particularly decisive move. But what we're seeing now looks to be a kind of triple top type pattern. And something that I haven't mentioned the last few days, but I always bang on about is when we get to these support levels, which this has been tested a load of times, you want that instant reaction. You want buyers to come and say, actually, we love this level. There's loads of buyers waiting. We've ambled around it. We've hit it and we've just stayed around it for the last week or so. So my bias would be on this, that we could get a break of this support level. And if we were to do that, just kind of looking at the measured move target, it's a bit tricky because this support level doesn't line up perfectly. But we'll take a bit of a rough measured move, which would be the top of the channel to the bottom. Take this, there we go. Oh, that's not perfectly drawn. The magnets always catch me out a bit. There we go. So we're looking for something like that, kind of back into, look at that, perfectly back into this level here. That's kind of where we'd be looking if we do get a break to the downside. But yeah, I'll leave it there on the stocks today. But it'll be an interesting to see how this week closes. I think especially for your Apples and Microsoft. I said I'm going to stop there. Jumping back in, we said on a weekly, if we do get closed here for Apple, not looking good. Google again, we're closing at the low end of the week of where the week's traded as well. Have a look at Microsoft. I haven't actually checked the week on Microsoft, but if it is the same kind of thing, look, we're kind of closing at the low end of the week, and these are really bad signs indeed. When the big names are starting to show signs of toppling, that to me suggests that maybe we are only just starting this this retracement, potentially a proper full-fledged bear market, which I haven't properly seen in my trading lifetime. So it'll be an interesting experience to me to see how that actually does play out in real time.
Don't worry, Jamie, we'll hold your hand through this really sort of like dreadful time that not many traders have seen. It's called a bear market. Welcome to it. And there's plenty more to come. We've seen, I've seen a few more than Joe as well. Yeah. So I suppose this is, once you see a bear market, you can't really ever shake it off. So
No.
Really,
it will be a rocky ride. I can guarantee that. Over the next sort of like, it does feel like the sell in May and go away feels like this could be the year for it. So
yeah,
We've been saying it for the last 20.
we have, yeah. I must admit, I have been, and I'll sort of like hold up our hand up, and we'll admit to that. But this feels better than ever from a bear perspective.
Yeah, definitely.
Yeah.
Okay, right. Let's shift it on then to the gun to the head trade. So, what we do every day on these videos is come up with 3 trade ideas that we like. Pretty much call them on the spot. Minimal amount of technical analysis goes into them. We're just, having to make a decision pretty quickly here. So the idea being that we try and use good risk management with these ideas. Each of the ideas must have a risk reward ratio in excess of 2 to 1. Of course, every idea must have a stop and a target. The ideas that we placed expire at 9 p.m. or when the stop or the target is hit. And we continue to keep track of these ideas on an ongoing basis. Yesterday, we had 3 trades. We also had 3 stop outs. So it didn't work out too well for us yesterday. That is how the game goes, unfortunately. All of these ideas are posted to our TradingView profile. You can see them here. So these are ideas that we posted yesterday. So please feel free to interact and talk to us. We're very happy to get back to you and let you know our thoughts, or even if you have anything else that you're looking at and would like us to go through it on the charts, you can interact with us here on the live stream. So new day, new ideas. What are we going to get to finish off the week? Who wants to go first?
I can start today if you
Go
like.
on then.
So I'm looking at pound New Zealand dollar, which I think I looked at before actually. Running into this 50% fib level we've got here on a daily chart. Had this big, very quick move down. We've ambled up to this 50% fib, and we've been struggling. We've drilled down to a 4-hour time frame. You can see we've kind of been in a bit of a channel, but we come down to a 1 hour, and this is what I really like. It looks like a bit of a head and shoulders. I mean, it's really, really messy, but you can see we've got a bit of a lower right shoulder here. I'd ideally want a break of this level before I able to sell it. That's not the aim of the game, but I'm kind of preempting the break, which is why, as you said, there's kind of a minimal amount of technical analysis, because you wouldn't typically want to sell this before you get that confirmation of a break. But I can see it coming. I've just got a good feeling about it. Pound is going to fall off today big time, for no other reason than my want, really. So we are going to sell pound against New Zealand dollar today. We're going to set current price, which is 1.9482. We're going to take our profit. We're kind of aiming for this measure move down, which is the bottom of the channel to the top of the channel, or if it's kind of saying it's head and shoulders, you could take the top of the head to the neckline. It's a bit ambiguous, but we're going to aim for 1.9334, and our stop's going to be just above this. I probably want to go above this high here, but I don't like 2 to 1 so much. I like 3.52 to 1. So we're going above this kind of recent high, and keeping our stop at 1.9524. This gives us a nice 3.52 risk reward. So looking for a move down on pound New Zealand dollar today.
Nice one.
Good luck.
Thank you.
I can go next. I've got sterling Swiss again. So yesterday.
Oh, you're going for it again?
Yeah, I had a great win on the sell side from this at the top end of the channel earlier in the week, and then yesterday I tried to buy it, but I got stopped out by that tiny little wick there below the low end of the range.
Oh, that doesn't count, does it?
A tiny new low.
It's like, what's the ball over the line? You know,
yeah, well, it was, unfortunately. We're a transparent bunch, and it's all there for everyone to see on TradingView, so I can't hide, and of course I don't want to. So going for it again today. It's still holding the lower end of this range. It looks pretty well defined in my eyes. This is a 4-hour chart. Decent candle over the last 4 hours, so I'm going to buy it right now at a price of 121.38. Going to target a move to 124.22, and we've got a stop loss at 120.67. So looking for around 4.69 R on that one today. I've got it all ready to go on here. This is part 3, so I've traded this for the third day in a row. It's going on now. If anybody wants to check it out, it's there for all to see.
Boom. No, you can't delete that. Well, you can for 15 minutes,
yeah,
but
I'm not
we
going
don't. No. Part 3, like it, Joe. I'm going to watch Top Gun next Wednesday, apparently, as well. So
okay,
is that part 3? I don't know if it feels like part 3. I don't know if it is or not.
Okay.
Right, I'm a bit confused. Obviously, I'm Mr. Bear, Mr. Bear with very little hair, and I'm looking at the weekly chart on Nasdaq, 7 in a row. I'm looking at the daily chart. The daily chart looks a little bit more promising, but only if we really get a break of 12,600. I don't think we're going to get that, but we've seen this like sell-off, this doji, this candle of indecision yesterday. That tells me maybe the buyers are going to really try and defend this 11,700 level. If I look at the 4-hour chart, it just gives me a bit more detail on that and tells me, yeah, break of 12,600, probably see about a 900-point rally. If the low is 11,700, 12,600, that's 900 points. Add 900 points onto that, 13,500, which would take you really nicely up to this level. So is this a potential bottom? Looking at the hourly chart, which is obviously the shorter time frame, we are at this key decision level. 12,074 is the level. If we broke above there right now, I'd be maybe getting long of this. So although I'm very, very bearish, I'm very sort of torn on this trade idea. So I'm going to go for I can't help myself. I'm going to sell it. How have I done that? I was lining this trade idea up to buy and just say, like, ignore your gut instinct, Stevie. So selling this at 12,054, targeting a move to 11,704, and I'm going to have 100-point stop in it. That's my trade idea. Actually, I could have less of a stop on it. I could really sort of like go for this one. If I have a 50 tick stop on it, that's a 7-to-1 risk reward. Now, let's be sensible-ish. I'll have a 100 tick stop on it. So selling at 12,054, targeting a move to 11,704, and stopping out if it gets to 12,154. That's my trade of the day. Trade of the day idea, not trade of the day, gun to head trade idea on the Nasdaq.
Okay, best of luck. There's 3 new trade ideas. They'll be published to the TradingView account momentarily, so check them out if you wish. But obviously bear in mind the process that we take in order to come up with these trade ideas. It is pretty much on the spot and therefore obviously carries a fair amount of risk. So in terms of data today, I've lost my screen that I usually share because I had some internet issues mid-broadcast, but we've got a Bank of England speaker that's probably speaking now, actually, 8:30 UK time. That's the only thing that we've got on the calendar of any importance today. Over the weekend, we've got this Australian general election. So if you have exposure to the Aussie currency and the Aussie stocks or Aussie indices, please do be aware of that and factor that into your decision when it comes to the close of business today, and that you won't be able to do anything until late on Sunday night or early on Monday morning. Anything else to add, gentlemen?
No, not a lot. Just be careful out there.
As always, yes. And have a fantastic weekend, and we will be back on Monday.
Lovely.
Have a good one, guys.
Cheers.
Bye.